I'd like to share with you my best 12 stocks that you can buy in case of crash again in the market. Hello everyone and welcome back to my success series of investments. I'm your host Antoaneta, and with today's video I'd like to give you a list of my top stocks that I would invest in if the stock market crashes right now again. While this post is aimed primarily at the beginners, all of you veterans are out there know that there is no such a thing as knowing too much. At the end of the day, your individual success in the stock market depends on your ability to make informed decisions, and without enough information, that is hardly possible. If you are new to the stock market or the investing scene as a whole, my list will help you sit you at the right track. If you are a veteran with some experience under your belt, then this video will just give you a couple of additional points to consider. This being said, please keep in mind that the investing world is very dynamic and things can change very rapidly. Yes, this affects both long and short-term strategies. If you aren't watching this post right now, remember that the things change every day. Over the course of this video, we will talk about following stocks in no particular order. But I only want to invest X. Will this list work? Yes. I pick my investment targets very carefully. I choose companies that are showing a lot of promise and have high growth potential. But I thought we are talking about long-term investment. Why are these lists so dynamic? Yes, I focus on the long term. However, the best time to invest in a company is when it hits a favorable price, which means even small market shots completely change the way you look at a certain stock. Is investing right now even safe? That's a bit tricky to answer. With COVID-19 on the loose, prices have plummeted. Presently, investors with a unique office of lifetime opportunity. Nvidia Corporation. Famous for its excellent hardware implementation, the Nvidia Corporation has been doing really well lately. They are well diversified and produce all sorts of things, from graphics cards for computers and laptops to self-driving cars and AI. Currently, they've got an excellent balance sheet, nearly 11 billion in cash and relatively low debt, just about 2 billion. A while back, I invested in Nvidia and held into them for a solid 18 months. Recently, however, I sold them for some of my shares because I wanted to go more to Facebook. I wanted to buy more. Looking back at it, I'm a bit regretful of this decision because the future looks really bright. I had some still. As soon as the stocks drop below 200, I'm going back in, and if they're under 180, I will go much more heavier to buy. Apple, we all know Apple for their fantastic phones and computers, and I've personally been a fan of theirs for many years. This being said, while their balance sheet is looking good, over 200 billions, if you add up all of the cash investments, they are held back by the debt, 93 billion. Apple's products and services are certainly unique. Their business model is fantastic, but the stats appear alarming to a lot of investors out there. Realistically speaking, we probably can't expect too much growth out of Apple in the coming months. I've made my fair share of money with Apple stocks. I held shares for just over 18 months and only sold some of them just because I wanted to buy some into Zoom. Again, in hindsight, I probably shouldn't have sold some of my shares just to get into another company quicker, and I'm definitely looking to get back in. If Apple drops below 200, I'm going to get some shares again. Qualcomm is one of the biggest microconductor manufacturers out there. Never heard of them? Well, let me ask you this. Do you have a smartphone? What about a tablet or laptop? Yeah, you are probably using their products without realizing it. They are a major player in their field and they've got a bright future ahead. I bought some Qualcomm stocks back in February and I'm definitely looking to buy more, but I can't justify it with the market being the way it is right now. I'm going to buy when they get under 65, but if I want to consider heavier investing, I need to drop much more, at least to below 50. My favorite, lovely Tesla. And it wouldn't be a promising companies with tons of potential list if Tesla wasn't on this list. With green energy, electric cars, and future engineering becoming more and more of a hot topic, Tesla definitely presents an interest both to investors and tech enthusiasts. As a firm believer in eco-friendliness and sustainability myself, I've always been a big fan of Tesla. I bought Tesla stock in December 2018 and I held into them for the last 1 year. Even though 2019 was quite a rocky year for them, I didn't give up on the panic and I didn't sell until this January, a few months ago. I sold some of my Tesla when it was 900 because I really wanted to get into Facebook. I still hold some of my Tesla and I will buy more if it drops around 400. Activision Blizzard. Activision is a major player in the computer game industry and owns brands like Candy Crush, Call of Duty and NASCAR video game series. And do you know what is good for a video game company? That's right, people who have to stay at home. People who have a lot more free time on their hands as they don't really want to go out. While a lot of the businesses out there are suffering from the COVID-19 pandemic, the gaming industry is left mostly intact. Their balance sheets are also looking very healthy, with nearly 6 billion in cash and cash equivalents, and their debts are well within reason, 2.6 billion. Even though I'm not interested in computer games at all, I still believe that there is a bright future for the gaming industry. Computer games give people more ways to socialize, meet new friends, practice languages, and even get a bit of a brain workout every now and then. I would love to invest in the stocks, and once it gets below 55, I will start buying. For me to buy a lot of ATVI, whoever will be to go below 50. Netflix is a very accessible and extremely affordable. On top of that, it's also a business model that benefits from people staying at home. Sadly, their balance sheets leave something to be desired. While they do have over 5 billion in cash, they are currently approaching 50 billion in debt. I bought some Netflix shares about a month ago and I'm delighted with their performance. For me, to really get motivated to invest more, however, it would need to go below 300. If it goes under 260, I'll buy more Netflix, even that the balance sheet is not great. Facebook. If there is one company that needs no introduction on this list, that is the Facebook Corporation. We are all know Facebook, and for the most part, we still use it. Even though the Facebook platform is nowhere near as popular among the younger generation as it once was, it has managed to hold its own thanks to WhatsApp and Instagram. As a result of the COVID-19 pandemic, ad rates have been going down, but usage has gone up a lot. Just like what games in Netflix does is perfectly understandable. It is also worth noting that there were some controversies about their data handling policies in the past, but the situation seems more or less stable now. Their balance sheets are absolutely amazing, with tens billions of dollars in cash and investments and virtually no debt to speak of. They've got one of the best balance sheets in the world right now. It is a stock that I've been buying into heavily over the last year and one that I strongly believed in. This is why about 10% of my portfolio is made from Facebook stocks. Generally, anything under 200 is good for Facebook as a company, but since I've already got so many shares, I'd rather wait a bit. If prices go down and I'm going to keep buying it, but it needs to go under 130. Disney is a big, well-known company with tons of potential for growth. They own a multitude of trendy brands, and they've shown us that they know that they're doing with their businesses. They know what they're doing. I invested in Disney around 2 years ago, and I've added some more stocks to my portfolio over the last few months. Even though I'm down at the moment, I'm not going to sell my shares because I strongly believe in this company. I have invested enough, so I will not be adding more here. Coca Cola is a solid company that has definitely stood the test for time. Although I'm not a fan of soft drinks, I actively encourage people to give up soft drinks if they want to be healthier. I simply can't deny the potential of this company. They pay very good dividends, and I'm here to keep receiving dividends till I can. Even today, they are still one of the top manufacturers of non-alcoholic beverages out there, and they are showing no signs of ever giving up their position. I'm currently holding some Coca Cola shares, and I plan on buying more as soon as the opportunity presents itself. Berkshire Hathaway, Warren Buffett's company, is a rather obvious choice for someone as passionate about investing as me. Mr. Buffett is the most famous investor in the entire world, and his words are a source of inspiration for everyone in the field. VOO SP500, Vanguard SP500 Index Fund, is an ETF and probably my favorite one. VOO is one of, if not the single cheapest way to invest in SP500. They allow me to make safe, long-term investments. And when I say long-term, I mean it. When I buy shares with them, I just let them sit there and grow for years. Bank of America. Yes, I know that COVID-19 hit the banks pretty hard. Interest rates are down and businesses isn't doing so well because a significant portion of the profit for the banks comes from lending. The unemployment rates are also hitting bank pretty hard, since the unemployed people means a lot more mortgage delinquencies. However, the banks is probably one of the strongest and safest banks in the US. And I believe that is going to make it through the crisis relatively unscathed. During the last recession of 2008, the Bank of America did a fantastic job at reducing its balance sheet risk, surprising every other bank in the record. Can it drop more? Of course, it can. If it drops, I'll buy more. I also love to buy some Google if it drops below 1,000 at least, and Amazon stocks, but that's only going to happen if they drop below 1,600 at least. Last summer I did a bit of experimentation and I bought, and I really enjoy having them. The results have excellent, and I'm really looking forward to more opportunities to invest in these two companies. In closing, I would just like to remind you that this video, along with any other information on my website or my YouTube channel, is based upon my personal experience and research. I'm not an investment expert. I'm not your financial advisor. Please always do your research. Don't be lazy, and consult with a certified professional before committing to any serious life alternate changes. Yes, I realized that we've gone on for a bit longer than usual here, but there were a lot of stocks and I didn't want to miss anything. Hopefully, these tips will help get you started and give you a bit more insight into the investment world. But what about you? Have you invested in any of these companies before? If yes, which are your favorite ones? If not, which one did you choose instead of them and why? As always, if you have any questions or experiences that you would like to share with me, the class, please let me know in the comments below. I'd love to hear from you. I always thank you for sending me lovely emails. I always love hearing from you. Thank you for watching, and please press the like button, subscribe to my channel, share my video with your family and friends. Until next time, thank you for watching. Stay green and motivated.